It doesn't indicate that the Fed has to fight harder to win. It indicates that the Fed has already lost. Inflation won the war. And this is not bullish for the dollar. Inflation is going to keep getting worse. Yes, it may slow down the rate cuts, but the Fed is not going to hike. Even though it never should have cut rates, all 100 basis points were a mistake. They're not going to be able to correct the mistake, because to do that, they're going to look so foolish if they have to do that. But not only do they have to take away all 100 basis points, they need to have rates significantly higher than where they were when they started cutting. There's no way the Fed is going to do that. A huge reduction in real rates. And that is very negative for the dollar, and that is very bullish for gold.
Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Is starting to sniff this out. The yield on a 30-year U.S. Treasury today rose above 4.9%. We're at 4.92%. The yield on a 10-year is 4.69. So these are the highest yields that we've had since the Fed started cutting rates. In fact, you have to go back even further than that. But again, this does not surprise me. This is exactly what I was saying was going to happen even before the Fed started cutting. But I said that when the Fed did cut, that would be market ended in 2020, with the COVID, blow off top in bonds and bottom in yields. But we are moving substantially higher. Mortgage rates now are back above 7% and rising. They're going to be above 8% pretty soon for a 30-year fixed rate mortgage. But they're back above 7. Credit card rates are 25%. They're going to keep going up. Now, we got more bad news. I mean, forget about the fact that the mainstream media is ignoring this boom in commodity prices. I mean, which is completely inconsistent with the story the Fed is trying to sell. How can they be telling us that inflation is going to come down when prices are soaring? And these commodities, these are input costs. So they're going to bleed in to producer prices and consumer prices, right? They're going to move first. And then you're going to see it going, up the chain. So these are leading indicators. So how could you ignore? The last time we started to see commodity prices surging like this, it was before inflation really ran away. And then in the face of it, the Fed was still claiming that inflation was transitory, even though commodity prices were showing that that wasn't the case. Well, that's happening again. Now they're saying that, inflation's gone and commodities are surging or will cause the inflation. They are the result of the inflation that is already there. The Fed never put out the entire time. And now you're seeing it in these commodity prices. You're going to see it more in oil. Again, one of the reasons that we didn't have a bigger move up in oil when Biden was president, he's still president for a few more weeks, was his politically motivated decision to raid the Strategic Petroleum Reserve. Imagine where oil prices would have gone or might be now had we never, let loose all that oil. I mean, we didn't have to drill, baby drill. We just tapped. We just sold the oil that we already had. But, that card has been played. Trump is not going to do that. And so we're not going to get, artificially low oil prices. Now, some people think, well, we're going to drill more oil. Maybe, but not until the prices are a lot higher. Because American oil companies are not going to invest in development and more CapEx for more drilling at $74 oil. They're just not going to do it. It's not high enough, But yes, if oil is back above 100 and it looks like it's going higher, and yeah, we'll probably get some more drilling. But that's not the environment that people expect. Everybody is talking about $40 oil. Well, at $40, no one's drilling oil, despite the fact that they're ignoring commodity prices. And I don't see anybody talking about it. They couldn't ignore the economic data that came out today. There was a big jump in prices paid in the PMI. It was the ISM Services Index, which was higher than expected. It was one of the only economic data points that was above expectations, although we did get jolts today that was above. But it was at 54.1. But the prices paid spiked up, highest level in 2 years. Obviously, there's a lot of inflationary pressures that have been building, and that spooked the bond market, together with the JOLTS numbers that showed a spike above 8 million in the job openings. And I think part of that has to do with optimism. There is a lot of misplaced optimism among businesses that things are going to get better because we have Trump. Now, that's going to fade relatively quickly once Trump becomes president and things don't get better. In fact, at his press conference again today, Donald Trump again reiterated how things are going to immediately get better. He said it's going to be right away. We're going to have this instant boom, right? Everything's going to magically get better when he's president. That's not going to happen. And when it doesn't happen, then a lot of these job openings may disappear because the businesses are going to lose more workers. So are going to be very disappointed as the data, especially when it comes to inflation and the Fed rate cuts. Now, the probability of rate cuts declined today after the release of this hotter than expected inflation number. And as soon as it came out, gold, which was up about $25, sold off. It still ended up, positive about 13, 14 bucks on the day. The dollar, which was down this morning, and actually had a big pop yesterday, the dollar rallied. I'll get into that after the break on why the dollar rallied. But the dollar sold off as soon as this hotter than expected inflation numbers came out. But it's not just the inflation numbers themselves that caused the dollar to rally, but it was the reaction in the bond market where the bonds were hitting new lows for the year on this news. And that increase in bond yields is propping up the dollar. But that's not good for the dollar. The currency traders still don't get what's happening. They're still of the opinion that hotter than expected inflation just means the Fed has to fight hard, bullish for the dollar. Well, that's not what it indicates. I've been saying this all along. It doesn't indicate that the Fed has to fight harder to win. It indicates that the Fed has already lost. Inflation won the war. And this is not bullish for the dollar. Inflation is going to keep getting worse. Yes, it may slow down the rate cuts, but the Fed is not going to hike. Even though it never should have cut rates, all 100 basis points were a mistake. They're not going to be able to correct the mistake, because to do that, they're going to look so foolish if they have to do that. But not only do they have to take away all 100 basis points, they need to have rates significantly higher than where they were when they started cutting. There's no way the Fed is going to do that. The only thing they're going to do is slow down the cuts. I can't see Powell hiking rates at all, even though he should, but he may not cut. But that's not bullish for the dollar, because if inflation keeps getting worse, and so instead of 2 or 3% inflation that people were expecting, we get 5 or 6 or 7% inflation, and the Fed just keeps rates where they are, that means a huge reduction in real rates. And that is very negative for the dollar, and that is very bullish for gold. And traders just haven't, connected the dots yet. The budget deficits, the national debt is now above $36.3 trillion. That means that we've added $8.5 trillion so far in Biden's 4 years of office. $8.5 trillion, over $8.5 trillion. That shattered Donald Trump's record for the most debt in any one presidential term. But what's even more maybe amazing, horrifying, shocking are probably better words, but Barack Obama, who has the most debt of any president, and of course Joe Biden was vice president for the entire 8 years that Obama was president, so you can hang some of the Obama deficits around Biden's neck, but he ran up 8.6 billion in debt in 4 years. Biden has done 8.5. In 8. Obama did 8.6 in 8 years. Biden has done 8.5 in 4. But by the time Biden leaves office, he will have broken that record. More debt than Obama did in 8. Now, unfortunately, I think if you add the increase in national debt that's going to happen during the 4 years of Trump. If you add Trump's second term to his first term, he will beat Biden. He will beat Obama. So he's got the record, but he's not going to hold it for long because Trump is going to take it. Now, these are not records that you want, but these are records, unfortunately, that we're going to get. The national debt is going to be growing at least $3 trillion a year while Trump is president. That's $12 trillion in debt in the next 4 years. That'd take the national debt up to about $48 trillion. I think there's a good chance we're going to hit $50 trillion during the next 4 years. But if you understand where inflation comes from, and even with all the Republicans talking about it, Elon Musk posting about it, that inflation is the result of government spending, and specifically deficit spending, and you look at all the deficit spending that is coming, that is going to be even greater than the deficit spending we already had. And, a lot of people will say, well, a lot of it was COVID. It wasn't just COVID. I mean, we haven't had a COVID problem in a couple of years. And look at what we're spending. Donald Trump's last, there's no more COVID. And the budget deficits are almost 3 times as big as they were pre-COVID. That's how much government has expanded since COVID. But I guarantee you, if it's not a pandemic, some other emergency is going to rear its head during Trump's term that is going to justify in their minds another huge increase in deficit spending, right? Because the government feels that there's no problem that can't be solved by deficit spending, because that's been the solution to every problem. So there will be some kind of emergency, whatever it is, right? Whether it's another pandemic or something else, right? Maybe even a fake alien invasion, who knows? But something is going to happen, and they're going to say, we need more government. Government has to come and spend, right? And so the deficits are going to be huge during the next 4 years. And even if nothing happens that results in a big surge in deficits, we're not going to cut back from where we are. That never happens. The deficits just keep going up. And the reason is because the cost of ending them is too great. The only way we can actually bring inflation back down to 2% is to burst the stock market bubble. You think Donald Trump wants to do that? He was bragging at today's press conference about the record high in the stock market since he began to do something that's going to crash the stock market or the real estate market, right? But that's what has to happen to bring inflation down, right? Because we have to have much higher rates than we've already had. We have to stop all the spending, all the borrowing, and that means a big recession. The recession is not the cure, but in order to have a cure, a recession is going to be a consequence of that cure. And if we don't want the recession, that means we don't get the cure. All we do is get a bigger case of the disease, which is what we're going to have. But the world hasn't come to terms with the higher inflation reality, that it's not going down to 2%, that inflation is going to be much, much higher than 2% indefinitely. And that means the bond market is still way mispriced. Gold is still way mispriced. The dollar is way mispriced. The markets are not pricing in inflation reality. They're pricing in an inflation fantasy that can't exist. And the only reason they believe it can exist is because they don't understand what inflation is. They don't understand where it comes from. And when you have Donald Trump criticizing saying our interest rates are too high and our inflation is too high, and wanting the Fed to cut rates at the same time he's complaining about inflation being too high. Well, when the Fed cuts rates, inflation is going to be even higher, right? He hasn't figured that out because the way they have to cut rates is going up. If the Fed keeps cutting rates, long-term rates are going to keep going up. And those rates are what Trump is looking at. So the only way the Fed is going to get long-term interest rates down is by creating more inflation. And so we got to pick our poison, right? But either way, it's going to be poison. We're not going to be able to do both because it is a political non-starter.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.